Most people think they have good auto insurance coverage until an accident proves otherwise. They tell me, Jay, I have full coverage. But full coverage doesn't mean good coverage. And it definitely doesn't mean enough coverage. One bad accident, one serious injury, one lawsuit. That's all it takes for minimum limits to turn into a financial disaster that follows you for years. Today, I'm going to break down what good insurance limits actually mean, what's the right way to think, and how to protect your income, savings, and future from one mistake on the road. So let's get started. Before we talk about dollar amounts and recommendations, we need to slow this thing down and make sure we're using the same language. What are auto insurance limits? Auto insurance limits are the maximum amount the insurance company will pay if you cause an accident. These limits apply to injuries to other people, damage to other vehicles, damage to property like buildings, fences, or utility poles. Your policy doesn't pay unlimited amounts. It stops exactly at the limits you choose. If the damage or injuries exceed your limits, the insurance company stops paying and you become financially responsible for the rest. This is where many drivers get caught off guard. They assume insurance follows them no matter what. It doesn't. Insurance will defend you and pay claims only up to your limits. Anything above those limits, anything else, comes directly out of your pocket. Now that you understand what limits actually do, the next question becomes obvious. Are the limits required by law even close to being enough? The answer is state minimums are almost never enough. Every state sets a legal minimum amount of auto insurance, but minimum doesn't mean safe. It simply means legal. Let me put some real-world context around this. A single ambulance ride and ER visit can easily exceed $25,000. A serious injury can cost $100,000 very quickly. And if there are multiple vehicles or passengers involved, the numbers go up quick, fast, and in a hurry. So I'll hit you with this. If you're carrying state minimum limits, your coverage may be exhausted before the first hospital bill is even paid. When this happens, your savings are exposed. Your wages can be garnished. Your future income can be at risk. Lawsuits can follow you for years. State minimum limits are designed to get you on the road, not to protect your financial life. So if minimum coverage is not enough, the next step is understanding what good coverage looks like. Good auto insurance coverage starts with strong liability limits. This is the part of your policy that protects everything you've built financially. For most drivers, common starting points include $100,000 per person, $300,000 per accident, $250,000 per person, and $500,000 per accident. These limits give your policy enough room to handle real accidents, not just minor fender benders. But liability alone is not enough. You also need to protect yourself from other drivers who are underinsured or not insured at all. That's where underinsured and underinsured motorist coverage comes in. This coverage helps you pay for your medical bills, your lost income, and your pain and suffering. If someone hits you and they don't have enough coverage, this is what protects you. Good coverage means your policy is built to protect both sides of the accident. Now let's make this personal because coverage should match your real life, not just a number on paper. Let's talk about how your lifestyle should drive your limits. Here's the question I always ask. What are you trying to protect? If you have a home, savings or investment, a side business or business, a professional career, and a family that depends on you, then low liability limits are working against you. So the more you have to lose, the more protection you need. And here's something that most people don't realize. Increasing limits is often the least expensive upgrades on an auto policy. You can get significant increases in protection for a relatively small change in premium. This is one of the smartest value decisions you can make in insurance. At a certain point, even strong auto limits are not enough on their own. You may need additional layers of protection. This is when an umbrella policy can help protect you from large injury claims, lawsuits involving multiple parties, and judgments that exceed your auto policy limits. This type of coverage is commonly used by homeowners, business owners, high-income professionals, families with growing assets, and families with teenage or young adult drivers. The cost is far lower than you think compared to the risks associated with being without it. Now that you understand how limits work and how they fit into a bigger protection strategy, let's bring it home. Here's the right way to think of insurance. Auto insurance is definitely not finding the cheapest price. It's about transferring risk from your personal finances to avoid any out-of-pocket costs. So what does good coverage actually mean? It means Your policy can handle a serious accident. Your savings remains protected. Your home and future stays intact. And if you are unsure whether your current limits really protect you, let's have the conversation before an accident forces one. Now, if this content was helpful, please share with someone who may benefit from this topic. And don't forget to like and please subscribe to my channel. But don't stop here. Check out my next video right here for more insurance and financial tips. And as I like to say, call Jay today. Thanks for listening.